I would like to explain how to set and achieve your stock investment goals. When it comes to achieving whatever goals you set for yourself and the capacity to be able to achieve those goals, it's necessary we go through the steps I want to highlight now. Number one, you define your objectives. And these objectives could be classified into two. You have your short-term objectives as well as your long-term goals. So what are your short-term objectives? Do you want to cater for yourself in the short term? You want to take care of your family? You want to pay your bills? You want to buy a car? You want to meet a kind of short-term needs within the next 6 months and a year? These are all short-term objectives. When it comes to long-term goals, we're talking about goals like retirement planning, try to accumulate money for your children and grandchildren, creating generational wealth, trying to purchase a home. All this could be classified under long-term goals. And so define these particular goals you're setting for yourself clearly and distinctively, because that will serve as a guide to the kind of strategy you are going to adopt in order to fulfill or to achieve these objectives. Number two, assess your financial situation. In assessing your financial situation, you are expected to calculate your net worth as well as you determine your income and your expenditure. In calculating your net worth, you sum up your assets, all those items around you that are bringing cash flow into your pocket are your assets, and all those items that are costing you money, like your car, it's kind of a liability. And then by the time you subtract your overall liabilities from your overall assets, you will arrive at your tangible net worth. So you calculate your net worth and then determine the value. You also look at your income and your expenditure, how much comes in, to your coffer every month or every year, as the case may be. And you also consider how much do you spend your daily, weekly, monthly, or even yearly expenditure, your bills. So you need to calculate your income, you need to determine, your expenditure, and then you subtract from your expenses to be able to arrive at a particular figure you could save at the end of the day. So you save your net worth, you determine your net worth, as well as obtain a savings after deducting your expenses from your income. That will determine, what you would commit to investing in the market. Number three, determine your risk tolerance. In this particular regards, you have high risk as well as low risk. Generally, when it comes to risk, the younger people, the younger folks tend to be, tend to accommodate a higher level of risk. They can invest in very risky investments, like they can go into options, they can go into futures, and sometimes commodities and even cryptocurrency. They are considered, relatively risky. They are very, very volatile, and one could very easily, lose money as a result. And you have, the low risk segment as well. Usually, elderly people, matured folks are relatively risk averse. And so if you are risk averse, you go for blue chip companies, index funds, and investment that will not, fluctuate exceedingly. You buy all these defensive stocks that will stand their ground, that will maintain their performance despite the performance of the economy. You go for investments that have a lower level of risk. You could You could you could buy gold, precious metals and the like, you know. Number 4, set specific and measurable goals. Your goals have to be specific and ought to be measurable. You could measure them in financial terms. You could attach figures to your goals. Are they measurable? And when it comes to this particular area, we are considering, number 1, the amount you are going to spend, and number 2, the timeline you want to allow your investment to grow. When it comes to the amount you are going to spend, you determine how much can I conveniently put into the markets. After determining your net worth and also, uh, calculating your expenses and your income, whatever remains, these are your disposable income. These are the amount you could very easily put in the market, and you will not touch this capital for a long period of time. And so, what amount are you willing to put into the markets? And then secondly, how long do you want to stay in the market? Is it 10 years? Is it 15 years? Is it 20 years? Is it 30 years? You determine the length of time it will take for you to be able to realize whatever goals you set for yourself. If it's a long-term goal, like retirement, then of course you're going to stay in the market for a very long period of time. And so the amount you're going to put in and then the timeline is very important when it comes to setting specific and measurable goals. You want to invest, let's say, $1 million. After investing that particular amount of money, you want to gain, let's say, 5 million and above. Then, of course, you ask yourself, how long will it take me to be able to compound, for me to be able to get, realize this amount of, money I have in mind. Number 5, create an investment strategy. You don't just invest haphazardly, you invest with a proven strategy, at hand. And this might involve diversification as well as asset allocation. You diversify your investments across different sectors and across different industries to mitigate the inherent risk that is, involved in investing. That is an integral part of the markets. You could equally, allocate, you could equally inculcate other assets apart from stock, so as to be able to curtail the risks you are exposing yourself to. And so diversification and asset allocation are very, very important. Number 6, research and select investment. So in this particular concept, you consider stock analysis as well as some fundamental and technical analysis. You analyze individual stocks. You look at the financial statement, the balance sheet, the cash flow statement. You look at its position in the industry. You equally look at, the potential for growth. Is the company able to grow over the long run, or is the company stagnated because of, lack of growth opportunity? You answer these questions. And when it comes to fundamental consideration, you look at the company fundamentals. In this particular regard, you're talking about, items like the earning per share. You talk about the price earning ratio. You talk about, the cash flow. You consider, many other items that could be found and extracted from the balance sheet, from the income statement, and from the cash flow statement. So you analyze the financial statement critically, and then you are going to derive fundamental, consideration out of these statements. And also you consider technical characteristics like the price, the trend in the market, as well as you might need to consult charts. Personally, I don't do technical analysis. I'm a fundamental investor. I look at fundamental metrics, and that, I think, is very, very it's safer, it's important, of course, and it's more guaranteed. And number 7, monitor and adjust. This will involve regular review of your investments, as well as making adjustments when necessary. When you invest in the market, you don't just fold your hands, you go to sleep, or you forget about it. No, regularly you look at how your investments are performing, based on given criteria, based on profitability, based on growth, based on these investments, this stock investment, meeting your predetermined, goals. You see, and so you adjust whenever necessary. If the stock or the stocks concerned are not doing very well, if they put out negative results, they make losses, you need to like sell those investments, sell those stocks, and increase your position, your holdings on the ones that are doing very well. And so by so doing, you will not fall victim of company specific risk or problems. And then number 8, stay informed. Stay informed. Before I continue, please subscribe to this channel, give me a thumb up, and press the notification button. I want to be very excited bringing contents like this to you. I have that particular desire, that passion of bringing education to your doorstep, so that you'll be able to, get the value, get the understanding of the market, so you can perform very well, so you can obtain, decent results from the market as a result of the education you are gaining from this particular channel. So you stay informed as it relates to market trend. What is happening in the market? What are the short-term news in the market? What are the noises the market is generating? Make sure you are informed, because if you're not really informed, a particular events may happen. And if you don't really have a knowledge of what really happened, it might affect your investment, negatively. And before you understand, you can see your stock going down without knowing the reason why it is going down. Sometimes political conditions, sometimes even a single announcement, a single piece of news information can bring a particular stock in your portfolio down. And so if you understand this particular aspect very well, you can sell before it hurts your portfolio. And of course, education, you stay educated, you keep on learning every day, you keep on, making sure that you are current. And it intrigues me in a sense that this education, this knowledge is not obtained in schools. It is not embedded in a typical school curriculum. You find them online, on website. And equally buy books, investment-related books from Amazon. You can get books there that you will use to do what? To educate yourself and increase because investing is a knowledge-based enterprise. The more you know, the more you are bound to earn. Then lastly, number 9, seek professional advice. You seek the counsel and the advice of a financial advisor. Although when it comes to investing, the entire something is a personal journey, but on your own, you may not be able to do much. But with the advice of people, of seasoned professionals, then of course, by the time you combine your knowledge and your prowess with professional advice from these classes of individuals, you are bound to have greater, better results, if you absorb, inculcate, and follow the advice, tenaciously. And so I am bringing this particular item to you, not just to entertain you. It's not meant for entertainment. Please go and take action. Do you have a stock account? Open one, because you learn by practicing. You learn by doing. You don't just learn by listening, but you learn by putting all what you are hearing in this particular channel into practical application. And as you do that, I want to believe that you obtain a better result, in the process.